Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Brian Bride, our Director of Payroll Operations. Brian, how are things?
I'm good. How are you?
I'm doing pretty wonderful. We're getting close to the end of the year. It's hard to believe that when typically we try to record and do things months in advance, but we start thinking about end of the year in October, November, so that we can really be trying to knock everything out in November, December. So we're talking about adjustments for the end of the year, and end of the year is still pretty important that you get things done by that deadline. So let's talk about these top adjustments that kind of need to get done by the end of the year, specific to payroll.
Sure. So W-2 season is really important. Everybody wants to do their tax return. We start getting calls about when our W-2 is available, probably next week, I would imagine. So there's a couple of things you need to do and be prepared for the end of the year. One of them is group term life insurance. So if you're a company that provides group term life insurance to your employees and the amount's over $50,000, that amount's taxable per the IRS. Is
that a common number to hit?
Yes. Yeah. So a lot of times the insurance will just be $50,000, but sometimes you'll have, individuals where it's 100, 150. So anything over that is taxable. The premium amount is. It's based, and there's an age base that you can put in. There's a rate table. So the system takes the IRS rate table and just adds it to the check, but it is taxable. It needs to go in box 1 of your W-2. So if you're not doing it throughout the year, at the end of the year, either on the last check or an adjustment check at the end of the year, you need to enter in your group term life premiums amounts.
And would you say this is like the number one thing that needs to get adjusted? Yeah,
it's something a lot of people miss. They'll forget that they have it. Or maybe they'll change benefits in January, a year ago, and they forgot about that. Now they're offering group term life, and then you bring it up to them like, oh yeah, we do have that, and we haven't been taking it out the entire year. So absolutely, it's one of the bigger things that we deal with.
Okay, what else is in there?
Yeah, so there's a concept called personal use of company car. A lot of owners do this, so it's pretty common in our client base that if you have a company car that the company pays for, but you can use it on the weekends, that's taxable. So let's say you have, a work truck isn't necessarily because you're just going back and forth to maybe a work site. But let's say you're a salesperson and they give you a car and they pay 100% of it. Then you can use the car on the weekend with no restrictions. They would figure out the price of the car and then how much you can use on the weekends. And then that amount is a taxable amount. A lot of companies will give an auto allowance instead. So maybe the salesperson owns the car and then now they get an auto allowance that's taxable that they can write off on their taxes. Or the other option is maybe stuff's reimbursable where they say, hey, I spent $50 on gas. I need a reimbursement. And that's not taxable at all. So you really have to go through hey, how is the car? Who bought it? Who really owns it? Is it available?
How much is it being used for personal? How much is it being used for work? Yep.
Right. So there's a concept of de minimis a lot in the tax world, and IRS just means you can't really measure it. So if you have a work truck, right, maybe you work for a plumbing company and you use it to pick your kid up from school and go home, that's not really what they're looking for. It's the company pays for the entire car on the weekends. I drove to Orlando, right? So that's definitely a taxable benefit to you.
Or yes, I do drive around this thing for work. And then on the weekend, I exclusively am driving in it anyway.
Right.
Yeah, those are things. Okay. Yeah. All right. What else?
Yeah. So the other thing that happens a lot with owners in our client base is called the shareholder owner health. So there's some rules in regards to health plans. And if you're 2% of the company, it's kind of confusing. So we really
I'm already confused by this.
Yeah. So we really rely on the accountants to tell us, hey, this owner that takes some W-2 wages, they need to have this health insurance add to their check. This is almost always done on the last check of the year, not normally done per payroll. It's just something to add to W-2. You don't necessarily have to withhold taxes from it, but sometimes they will. But this is one that if you're an owner and you have a good accountant, they should be telling you, hey, did you do this yet? And if you haven't, you should reach out so we can try to figure that out for you.
Okay. And this is really common. It
Yes.
waiting till the end of the year where they just take a check at the end.
Yeah. So then usually the check's a zero.
Okay.
That check, it says we have to put the taxable wages on box 1 of the W-2 to make sure that when you file your tax return, you're saying, here's all of the money I made for the year.
Okay. And then let's see here. Bonus?
Yeah. So there's some pay types at the end of the year that are really, really important. So maybe you're giving a bonus, Christmas bonus to employees. Maybe it's an annual bonus. A lot of times clients will want to do separate things for that. So there's taxability issues that you want to think about, and there's 401k is what you want to think about. So let's say, if you're giving people bonuses are about the same as their pay or half or something, like it's a bonus on the smaller end, then you can just add to a check. It's not really an issue. If you're doing larger bonuses, you're supposed to take out 22.5% for federal taxes. That's from 2008, right? From the financial crisis. So whenever you give a bonus to somebody, you're supposed to take out a larger percent of tax in order to make sure that everything's covered. Sometimes clients aren't that happy about it, or the employees aren't going. It's not enough that's going to trigger a big, tax bill. That they'll be like, all right, well, can we make taxes like a quarterly amount? So that's something that we do. You also have to think about, are you going to add 401k? Technically, if you're giving somebody a bonus that's wages earned or compensation, it's probably included in 401k. But a lot of times employees want to opt out of that. And so depending on your 401k plan, employees can opt in, opt out per payroll. Sometimes it's per month, per quarter. Most of them are like per payroll. You can really be like, I don't want it this time and I want it this time. So
does that affect you guys? Is that common? Is it difficult?
Yeah. So it does affect us, but we can set up templates so that we do it one time and then you're done. So it'd be like, all right, we have a couple of clients that are like, we have 3 templates for them. One's a bonus. One's a bonus with the taxes. One's a bonus with 401k. One's a bonus, no 401k. So they just need to know which template to use. So maybe half the employees want the 401k out and the other half don't. Then you can just set up, ISL is pretty good at this. You can set up a separate check, pick the template, put your bonus amounts in, and then you're good to go.
Okay. I mean, so really where this seems to affect people are the people who get bonuses regularly, not just the people who get a bonus at the end of the year.
Right. Or a large one. Right. So maybe you make 60 grand, but your bonus is 20,000. You'll want to probably take the supplemental amount for that because it could really affect your taxes. So.
Okay. What else you got in here?
Yeah. So one's third-party sick pay. It's uncommon, but we do see it a lot. So that's if somebody has a LTD or STD policy and they go out on disability and the insurance company is giving them payments. Generally, the taxability is if it's post-tax deduction premium out of your check, then the amount you get is not taxed at all. Or if it's pre-tax, then that amount gets taxed and the insurance company will take the tax money out, but you still need it on your W-2. So that's where it kind of gets confusing. So if somebody, let's say they get $100 a week and they paid it post-tax, they still have to add that maybe they're on short-term disability for 6 weeks. That $600 has to be in their box 1 in their W-2. So the insurance company will send you a sheet that says, all right, we paid this much, this person, this much. Here's the taxes taken out. They'll take out employee taxes if owed. Employer taxes are up to the employer. So that's why you also have to add it so that your 941s make sense at the end of the year, that these payments were actually made.
Okay. And then is that it, or is there any more?
Yeah. So there's one thing that we really want people to do at the end is we're running W-2 previews for you to double check. Okay. So
what is a W-2 preview?
Sure. So, your W-2s are your tax form at the end of the year. Everybody wants it, so they get their refund. But we want to make sure they're accurate because if we have to make a correction, there's amendments we have to do. There's a W-2C form you have to fill out. It delays their refund. So we want to make sure that we're right. So we send W-2 previews November, December, and you can look at them. So you can say, all right, well, I'm a company that doesn't offer pre-tax medical. All my boxes should be the same. The Social Security box, Medicare box, federal box. Maybe I just have a 401k plan and no benefits. So my federal box for anybody that's 401k needs to be less than the Social Security box. So there's things you can kind of check to make sure it's right. And then the best thing to do is look at your own, right? So if you're the payroll administrator, you want to say, hey, does this make sense? Is this the right amount of money? Is the right deductions being taken out to make sure that we have everything right so that you can file your taxes and be satisfied that it's done.
And how, here at Kaizen, we do this all the time. Right?
Yes. So that's part of our year-end program is that we'll provide to you W-2 previews that you log on and take a look at them and say, all right, here's what you need to look at. What deductions do you have? And so there's a little checklist that says, here, do this, do you have 401k, do you have medical? These boxes should be the same. They should be different depending on what they have. So, yep. So you really want to take like the easiest, the employee, no deductions, make sure they matches, and then take the employee like the most complex. Yep. And say, hey, does this check make sense? And then if you're kind of in the middle there.
Okay, cool. It sounds like there's a lot. Is this common? Like, tell me, Brian, like how many new client comes on board? They probably have a lot of adjustments, right? Especially the first year. But after that, are they kind of like set in their ways?
Well, that's why. Yeah. So that's why we send out a survey every end of the year to make sure nothing's changed. And then we try to set it up. We're like, all right, well, here's our notes that you have to do. We're going to do bonuses so that we know to talk to you through it, to set up the templates so they're there so they can do it for next time. But yeah, it is a big deal, especially if you're a new business and you've never done this before. It can really get overwhelming.
Okay, perfect. Thank you so much.
Yeah, thank you.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.